Hello and welcome. You have tuned into Market Fatafat on ET Now. I'm Shristi Sharma and with me is Vinnie Motiwala. And viewers, this is the show where in the next 1 hour, we're going to be telling you all the counters that are buzzing as of now, either on the back of the news flow or on the back of the technical. So let's get started. And Vinnie, clearly a day of sell-off, no respite from the sell-off. Nifty as well as Bank Nifty trading at the day's lowest point.
Absolutely, at the day's lowest point. We started off also in the red and then it just intensified in terms of a fall that we saw. Nifty, Bank Nifty both trading at the day's lowest point. Other than that, what is holding on today is the broader market still. We're seeing some bit of a gain when you pull up the broader markets. That's the Nifty small cap and the mid cap managing to do better than what at least the broader benchmark indices was doing. So yes, look at the mid cap also trying to come to the green side, while small cap comfortably holding on to an uptick of almost 0.6 or 0.3%, and in that range it's managing to hold on to that green. Other than that, we've seen Nifty Media, which was managing to hold on to gains of almost 0.7% in trade, and pharma names also managing to hold on to gains. So when you look at it in terms of an up move for some of the individual stock moves also, it's going to be interesting to watch out for how we're seeing a move that is coming in terms of Exide, Eicher Motors, HDFC, AMC. We'll be talking all about that, as well as Infosys actually today that is down and out, putting some pressure on the Nifty as well. And Nifty Infosys is down almost 3% ahead of its earnings. That will be on Friday, but yes, keeping an eye out on that. Shrishti, nothing exciting because important companies, big companies are seeing a fall. So in terms of Nifty 50, at least we're seeing a fall coming in from Infosys. Other than that, we do have ICICI Bank, Reliance, which is also seeing a fall, and that's dragging on the Nifty 50 clearly today.
Well, yes, that's the way how the markets are panning out right now. But with this, there are a lot of stocks, viewers, that are in the news flow, and some of them are really cheering up in today's trading session. So let's start highlighting all of them one by one. But before that, let me connect with our team of researchers as well as our technical expert for today. So on the technical side, we have been joined by Osho Krishan, and on the research front, Snehi and Gaurav are joining us on the show. Very good afternoon to all three of you. And let me take the first stock that in this falling market, one stock that is really happy is Happy Forgings, and the stock is up about 5% in today's trading session, and that's after an announcement where Happy Forgings received an order to supply the brake flanks for the US utility vehicles under a multi-year contract, and this one is a significant contract coming in for Happy Forgings because they say that the total order book, the total order value of this contract is around 500 crores for the entire period until December 2034. So on a per annum basis, the contract value is around 60 to 70 crores per annum, and this will commence from Q4 of FY26 and Q1 of FY24. And in order to tell you about the customer that has given this order, then they are one of the leading global tier 1 manufacturers of the automobile driveline components and systems, and this order further cements the company's reputation as a trusted partner in delivering the complex and the critical components for the automotive industry. So good news for Happy Forgings, and the stock is up by 4% as of now.
Okay, that's all about Happy Forging. Starting on a positive note, at least for the show. But AB Capital, Osho, that's the first stock that you've picked out for us. Good afternoon. And when you look at it in terms of a 6-month move, it's not that much of a cheer, at least for AB Capital. 12-13% return in the last 6 months. Should we start expecting a better up move now for AB Capital?
Very good afternoon, everyone. Well, looking at the technical perspective of AB Capital, then this month it has surged approximately 16%, and it has given a multi-week breakout around the zone of 195. From last 2 days, there has been a strong volatility that can be seen because of the overall pressure in the market, but the stock is still hovering above the breakout zone of 195. So I am expecting that from here onwards, as we have seen a multi-week breakout, so there can be a followed up buying in this counter in the coming period. On the higher end, the immediate target that I am expecting is approximately of 218 followed by 232. So these are two of the targets on short to medium term time frame, and overall the structure looks very positive. There can be some in between hiccups or profit booking that can be seen, but till the time it is sustaining above the zone of 195, I am expecting that every dip should be auguring well for the buyers for a higher target of 218 and 32.
Okay, 218 and 232 is something that one should watch out for from AB Capital, and maybe every dip is something as an opportunity is what Osho is highlighting for the stock. Let's move on, talk about VST Industries, because seems like Radhakishan Damani has been obviously interested in the stock since 2001. It's not the first time he's making, but he's increased more of his stake, and now when you look at it, yesterday in a bulk deal what he did was he bought 2.34 lakh shares, which is 1.5% stake in the company. The seller of this was HDFC Mutual Fund. HDFC Mutual Fund have actually been selling stake every quarter. When you look at it, they've been reducing some bit of their stake, and in the yesterday's block deal, they sold around 2.1% stake. Now, let's talk about Mr. Damani and what he's done. He and the promoter group overall, his related companies, Derived Trading as well as Brightstar Investment, in total now will hold around 33.65% stake. Last time also he had increased stake in Jan 2024. We have the details of shareholding till December 2023, and adding all this, they will now hold around 33.65% stake, which is higher and much larger than what the promoters are holding. Promoters are holding around 32.16% stake as of December 2023. So now RK Damani actually becomes the lead largest shareholder in VST Industries. That's keeping a stock abuzz as well. And let's not forget, versus valuations of ITC, VST Industries is still cheaper. So it's interesting to watch out for where this is headed, Shrishti.
All right, that's about VST Industries. But moving on, and Osho, coming to you to have your second stock for today, and that is Deepak Nitride. What a move in a weak market, 1.5% uptick on this counter. Tell us, what are the next targets that you're looking out for?
See, Deepak Nitrite was in my radar from the zone of approximately 2200 levels, because it has came above the 200-day SMA after a very long time. And with the recent development, it is definitely forming a very bullish pattern on the daily time frame, which is a flat kind of a pattern. And with today's closure above 2316 on spot levels, it will give a confirmation of a bullish uptrend to continue. So I'm expecting that in the coming period, 2380 is the first minimal target that one can expect as a BTST kind of a thing. But after that, even it has the potential to test the zone of 2450 in the coming period. So all these targets are for a very short-term perspective. Overall, there has been a strong reversal in this counter, and I am expecting a decent up rally from medium to long-term perspective.
Okay, let's move on and talk about a company that we don't talk usually, is Dynacon Systems. But this stock is seeing a strong up move today and staying intraday record high levels is what it's managed to hit. What is the reason for the stock being a bust today?
Well, Vinnie, absolutely, like you pointed out, this stock is doing pretty well for itself, up 17.5% on an intraday basis. And you can see that somewhere around that 12 o'clock mark, we did see a sharp spike coming in the stock. And this is on the back of an order win. That is what is aiding this stock today. Now, the company has announced that it has secured a contract which is worth 233 crores from the National Bank for Agriculture and Rural Development, which is NABARD. Now, this contract also spans over a period of 5 years. The contract involves upgradation and migration of the core banking solution of NABARD from Finacle 7.0 to Finacle 10.2.25, operating on the application service provider, which is the ASP model. The scope of the contract includes serving 1,391 branches of 38 state cooperative banks across 8 states. So the scope of this order is rather wide, and that is why Dynacon System is doing so well today. And under this contract, Dynacon will be deploying a whole host of services like consultancy, implementation, customization, as well as support. So on the back of this 233 crore order win, the stock is up and away, 17.5% up as we speak.
Okay, let's move on to the next stock then, and we have Coromandel International. That's Osho, that's the one you picked out for us, Osho. When you look at it in the last 6 months, seems like a bit of a correction that has come in. What is the view now on Coromandel International? Is it the right time to start picking up and adding the stock?
See, overall, with the inception of April month, this counter has given a double bottom breakout from the zone of 1110, 1120 spot levels. Then it has surged towards the zone of 1190, and again with the correction in the broader market, it has again dipped towards retesting the neckline of 1120. So that gives an opportunity to reaccumulate the counter for those who have missed in the previous rally. So I am expecting that from here onwards, there can be a decent upward rally. Approximately 1180 to 1200 should be acting as the first target, and the time it surpasses the zone of 1200, then from there onwards we can see a very strong reversal kind of a move in this counter for higher targets of nearly 1280 to 1300 on short-term time basis.
All All right, that's about Coromandel International, still giving you an opportunity for a fresh entry. But let's talk about Bharti Hexacom. And Gaurav, one of the recent listings, tell us what's the news flow out here. The stock is up around 6%.
Well, yes, Bharti Hexacom is going to be in focus because now Jefferies has initiated with the buy rating and a target price of 1,080 rupees on the stock. So what they believe is that the company is actually a best play when it comes to Indian telecom sector, and at the same time they believe that company has a strong performance outlook, and at the same time they will maintain the healthy margins that we have seen in the company so far. Company will from here on will generate strong free cash flow as well, which will help them deleverage their balance sheet, and at the same time lower capital intensity is going to drive higher ROC for the company. And on back of this, now they believe that we may see EBITDA CAGR of around 21% over the next 3 years for the company. Now coming back to the stock performance, we have already seen that the stock has outperformed almost 6% in today's trade itself. And if you look at the stock's performance since its listing, which was on Friday, we have already seen that the stock has already performed more than 10% since its listing. So all in all, a strong momentum is visible in Bharti Hexacom. So definitely keeping an eye on this counter.
Okay, surely keeping an eye out on Bharti Hexacom. Let's move on and talk about Nippon Life Asset Management. Osho, on the charts, what's the view for this one? Because from around 230 levels, today it's at 540, 550 levels, more than doubling in terms of the stock move in the last 1 year. At these current levels of around 550, should one still look at buying Nippon Life?
See, technically this counter is into the cycle of making higher highs on the all time frame. So overall the structure is very positive. The biasness is also very bullish. But from here onwards, as we have seen, there has been a strong breakout from the zone of nearly 520 spot levels. So from here onwards, the technical setup is entering into the overbought territory. But looking at the overall momentum, I am expecting that another 25 to 30 odd point kind of a movement is pending in this counter. So from here onwards, 570 to 580 is the target that one can expect from Nippon Life Science. On the lower end, 520 and 500 is expected to act as a very strong cushion for any kind of blip. So in future also, if there will be any kind of blip towards 520, one should definitely try to accumulate for a higher target of 570 to 580.
Right, that's about Nippon India Life. But let's talk about Excite, which is really excited in today's trading session.
Not
and
today
not
only, Shishti. I think it's now become a regular on Fatafat because every day one of us is taking Excite for sure now.
Well, yes, Vinnie, because just last week the company announced that they have come out in an alliance and a pact with Hyundai and Kia, which is indeed very positive because that opens the door for their technology. Because getting a thumbs up from these global OEMs, the analysts believe that going ahead there could be more such orders coming in for the localization of the EV batteries, and day after day we are seeing some of the other brokerages coming out and raising their target price. And today was Nomura, where they maintained their buy rating and raised the target price to 485 rupees versus 233 rupees earlier. And what Nomura is saying that with this new order win, there are more doors that are opening right now, and going ahead there is a possibility that there could be some import duties imposed by the government itself in order to import of these EV batteries in India. So clearly just two players that will be left to cater to the demand, that is Excite and Maharaja, and both are up in today's trading session.
Okay, surely keeping an eye out on that. But let's move on, talk about Ugrow Capital as Snehi, and this one focus on the back of its Q4 updates.
Absolutely, Vinnie. On the back of its Q4 updates, which we just received a short while ago, the overall AUM has grown by 8% on a year-on-year basis. It has crossed that 9,000 crore mark. So it's a positive coming in for the company. It's also up 48% on a year-on-year basis when you compare Q4 of FY24 with Q4 of FY23. Moving on, total liabilities has come at 4,660 crores. What's key is that the company has achieved their off-book AUM of 46% as of March of this year, which is up 40% on a year-on-year basis. Now the company is very close to achieving the 50% target that they had given earlier. So overall, a decent set of numbers coming in for Ugrow. On the back of that, the stock is up 3.2% as we speak.
All right, that's about Ugrow, but Osho, clearly one of the gas counters that is in focus and in pressure today is Gujarat Gas. A reversal on the charts. How are you looking at this one?
See, overall, oil and gas companies are gaining some kind of traction in the last 2 to 3 trading sessions. Gujarat Gas, one of the counter which have seen a strong slopeline trend breakout in the last trading session, but obviously in today's session there has been a bit of correction that can be definitely seen. but overall the trend has turned around to be on the bullish front. So I'm expecting that the time it surpasses the zone of 570 on a sustainable basis, then from there onwards there can be a strong movement that we can expect. So one should definitely keep this counter in their watch list. The time it gives a closer above 570, then from the follow-up day it has the potential to test the zone of 620 in a short-term time frame. So overall the chart structure has seen an initial sign of reversal, and one should definitely be watchful in this counter.
Okay, let's keep an eye out on Gujarat Gas, a bit watchful on Gujarat Gas. That's Osho's view. But let's move on, talk about HDFC AMC. This one is in focus today because we have a brokerage note that's come in from JP Morgan, and they've updated the stock to an overweight from a previous neutral rating, hiked the target price also to 4,450 rupees from 3,500 rupees per share. Now, what they're saying that the market share has improved for the company, that is led by better performance, and obviously benefits of the merger is still to flow through for HDFC AMC. So obviously the core EBIT margin is expected to hold quite steady despite the better mix, and overall regulatory overhang seems to have been abated now. So yes, because of that, they're quite positive on HDFC AMC. Today the stock is buzzing away and trade up almost 3.2% as of now, the day's highest point. That's HDFC AMC for y'all.
All right, moving on, and Osho, let's talk about Trent. No stopping for this particular counter. How are you looking at this one?
See, overall the trend for Trent is very positive. It has been hovering near the 52 weeks high only, but there has been a strong consolidation from the past two trading months. From past two trading months, there has been a very slender range bound movement that can be seen. On the higher end, 34,000 is acting as the resistance. On the lower end, 3,800, 3,850 is acting as the support zone. So the time it gives a breakthrough on the higher end, then from there onwards one can expect a strong up move of approximately 250 to 300 odd points. So one should definitely keep this counter also in their watch list. The time it surpasses the zone of 4,000 on a decisive manner, it has the potential to go towards 4,300 on immediate basis.
Okay, surely keeping an eye out on Trent. Let's move on and talk about Sterlite Tech. Why is that one in focus? What's the reason for the move in the stock today?
Well, Vinnie, so the stock is doing pretty well for itself in today's trading session, up 6% as we speak, and this is on the back of the update that we are getting for its QIP. Now, the company has raised 1,000 crore via this QIP. They've gone ahead and issued 8.84 crore equity shares to investors, and this list includes some very marquee names like HDFC Mutual Fund, Nippon Life India, Goldman Sachs, as well as Bandhan Mutual Fund. So, a good list of names coming in, and on the back of that, the stock is doing pretty well. Now, post the allotment, the paid-up equity share capital of the company has increased to 97.5 crore rupees, comprising of 48.75 crore shares. So, well, this is the update that we just got on the QIP of this company, and the stock is doing pretty well for itself, up 6%.
All right, moving on, and let's talk about Birlasoft. And Osho, surprisingly, with the fall in the IT space, Birlasoft is seeing no such significant moves on the downside, at least for today. How are you looking at this one? Will you be a buyer at these levels?
For Birlasoft, I'll prefer to have a selling options on the higher end because it has given a breakdown around the zone of 720 on the spot levels. So any kind of surge towards the zone of 720 can be argued well for the bears to keep a bearish bet in this counter. On the lower end, 680 to 675 is the support zone where one can definitely see some kind of consolidation from a short to medium term time frame. But for now, there is approximately 30 points of dip is still pending in this counter, so one should keep track in Birlasoft. Any surge towards 720 should be acting as a resistance, and one should sell Birlasoft around 720 odd units.
Okay, surely keeping an eye out on Birlasoft over there and those levels over there for Birlasoft. But let's move on and talk about some brokerage notes that have initiated coverage. DOMS as well as Flare, both these stocks got up today and focused on the back of a brokerage note. What is it saying?
Well, yes, DOMS and Flare, both these stocks are in focus because now Nuvama has initiated on stationery and material segment, and in this they have initiated on DOMS with buy rating and a target price of 1,944 rupees, and for Flares they have given a target price of 463 rupees while maintaining the buy rating. So what they believe is that the Indian stationery market and the art market is going to expand almost by 13% CAGR over the next 5 years, and at the same time India is poised to be an export hub for stationery products. At the same time, if you look at economic activities they are higher in India, and this will drive somewhere the office supply demand in India, and we may see some kind of shift towards more creative products as well. And because of all these factors, if you look at DOMS, so far the company has given up, company has outperformed when it comes to its revenues, and for Flair the profitability has been best amongst the peers, and that is why they are being bullish on both the stocks. Looking at the stock performance also, DOM has been up almost 4% and Flair has also given almost 3% of returns for the investors in today's trade. So all in all, it will be really interesting to see how these stocks perform into days coming ahead as well.
Absolutely. Will be interesting to see how they start performing as well. Their recent listings, let's not forget that. But today, both these stocks surely buzzing in trade on the back of a brokerage note. Let's move on, talk about UltraTech Cement, then Osho. And when you look at it, in the last 6 months is when we've actually started seeing some bit of an up move actually coming for UltraTech Cement. What's the view now on this one? 9,420 at these levels, still a buy?
See, overall, as you have mentioned, in the last year, by year end, it has seen a very strong surge from the zone of 8,800 towards the zone of 1,500. But in the recent period, in the last 4 weeks, it is forming a lower low, lower high pattern on the technical chart. And even with yesterday's setup, it has given a breakdown from the very strong support of approximately 9,500 odd level. So I am expecting that in the coming period, there is some kind of selling pressure that can be seen in UltraTech Cement. Approximately 9,200 is the immediate support zone. Even if it breaches, then it can drag towards the zone of 200-day SMA, which is placed around 9,000 odd levels. So on the higher end, again, I have a sell kind of a view approach in this counter. 95 to 9,600 zone should be acting as the resistance, and on the lower end, 9,200 followed by 9,000 should be acting as the support zone.
Okay, let's move on to the next stock then, and this one has been glittering in trade for some time now, last couple of days since its Q4 update that has come in. That's Senco Gold, and look at the up move today itself as well. 7% up move in the last couple of trading sessions. We could say almost around 30% uptick that we have seen for the stock, and when you're looking at it, strong Q4 update that came in from Senco Gold, much better than what the peers have highlighted as well. And the stock is trading at the highest level since its IPO that was there in the recent times. So it's at the record high level since IPO is now. When you talk about Senco Gold, in terms of the performance versus Titan and Kalyan. So when you look at it in terms of Q4 update, overall the total sales growth for Titan was at 17%, while Kalyan was at 34%, while Senco managed to beat that at 39%. Also beat the analyst expectations in terms of what they were expecting from the growth of the company. They've been focusing on increasing more stores, their expansion strategy, the studded ratio for the company, something that has seen an improvement versus last year. So 11.4% is the studded ratio versus 10.4% last year, and that is something that is keeping the stock a buzz, better than what the street was expecting, better than its peers, and that is why an up move of 7% today as well.
Alright, that's about Senco Gold. But Snehi, let's talk about Som Distilleries. Tell us what's the news flow out here.
Well, Shrishti, Som Distilleries has successfully commissioned a state-of-the-art wrap-around packaging equipment at their existing Bhopal canning facility. They believe that this will streamline their production processes and enhance overall efficiency as well. Now, with this technology in place, they anticipate an increase in the operational efficiency by roughly 25%, minimizing downtime and maximizing output. So, on the back of this new technology or this new facility that they have installed in their existing Bhopal plant, the stock is doing pretty well, up almost 4% in today's trading session.
Okay, that is Som Distilleries for you all, keeping an eye out on that. Gaurav, all cargo terminals, that stock is in focus today on the back of its Q4 update, I believe.
So the company has come up with a monthly update, and if we look at the numbers, they were actually quite strong. So if you look at the CFS volumes, they came up at 54.7 thousand TEUs, which is actually showing an uptick of 1% on a YY basis and 8% on a month-on-month basis. Now the highlight here is that this is actually a highest monthly volume that the company has recorded in FY24, and because of this, the company is also saying that they have achieved this number because now they are focusing more on sales accelerating initiatives. At the same time, growth in export volumes and import volumes is also better. And on the back of this news, if you look at the stock performance also, it was up almost 2 to 3% in the morning, but now it has settled down to 2%. But still, on the back of the strong updates that the company have given on the monthly performance, it will be interesting to see how the stock performs in coming days.
Well, yes, all eyes on El Cargo Terminus. But moving on, and let's shift focus to one of the exclusive stories of ET now, where non-life insurers will request the Supreme Court to make them party in standard hospital charges case. Anurag Shah is here with all the exclusive details. Take it away, Anurag.
An important ongoing case in Supreme Court regarding the standard treatment charges. Now, non-life insurers will also request Supreme Court to make them party in this case, because non-life insurers plays a important crucial role in treatment cost through insurance claims. So around 30 to 35% of overall hospital revenue is through insurance claims given by insurance companies in form of reimbursement or cashless claim, and for network hospital this percentage is more than 50%. So recently Supreme Court has asked the center to come up with to form a standard treatment rate, because there is a huge discrepancy in treatment charges in government hospitals and private hospitals, to come up with a standard treatment charges. So non-life insurers thinks that if in this case they can suggest about the standard charges, insurers already have a treatment packages with 40,000 hospitals across the country. They have tie-up with the 40,000 hospitals, and they have already negotiated with hospital on different procedures and protocols. So that can be a case in point where the discussions can happen and they can share their treatment rates with the central government also. It's an important development, because as per insurers, they think if standard rates can be applied across the country, then the frauds in hospital treatment can be mitigated and more transparency can be bring in. That will help to increase the insurance penetration, and if overall claims or overall treatment cost goes down, then it will help policyholders also, because the claim amount is increasing every year, and it is on the other side, if the claim goes increasing regularly, insurance companies are bound to increase their premium also. So now insurance companies will become a party in this important case related to the standard hospital charges.
Absolutely, an important update coming in there, and that's what we'll be keeping an eye out on for the non-life insurance companies. But with that, let's just slip into a very short break. Don't go anywhere. We'll be back with more stocks after the break.
If you like this video, then like, share and subscribe to ET Now.